Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stendhal with tonight's Deep Dive. It is December 21st, 2017, and what I want to do is take a look at basically the primary market's going to be cotton because it had a big move today, and if we have time, we'll look at a little bit of soybeans. So for cotton in particular, the ETF is BAL, which is not the most liquid, I realize, but it is at least something that tracks the cotton market if you don't trade the future side. We have the trend to the upside across the board, short, intermediate, and long term. We got the technical rating, which is quite high, and we got the seasonal tendencies, which are high. So I'm going to focus a little bit on the seasonal tendencies because nothing has popped up here as of yet, but if we take a look at an early warning signal, if I can find it here, deep dive pattern, and what I want to do is I want to take a look at cotton in a little closer emphasis here because it just had a high that triggered here under dazed, kind of a new one that I haven't spoken about here just recently. So let's just take a quick look here at cotton in itself, and if I can pull cotton up, which had a nice move today, it was up 2.5% at 77.63 on the close. And in looking at this market, you can see that there was a big move today, and that big move is what we call a dazed high. Dazed because it was so volatile, so very strong, and typically when we get these types of days, what ends up happening is that the market has a tendency to sometimes stop and reverse. It's not necessarily a bearish signal, it's just sometimes they either continue to surge or they take a little bit of a break. So I want to point out what took place here. So here's the what was resistance to the market. It broke above, it came back down and found support, and then today it really rallied. And what I want to point out here is that that was pretty strong support to the market, resistance to the market, when it broke back above. But if we look further over here, we get a 47. That's where the market actually stopped on the day. And when you get that type of a day, there's no doubt that you can get further follow-through, but it's going to have to deal with this level of, right now, resistance at 77.63. That's the number for this resistance right there. And if we take a closer look at the patterns here for cotton, just the other day we were talking about how the market had broken above and was dealing with that support level, which was resistance at the time, and we talked about the fact that it would come down and maybe find some support, and then we'd see where the market would go from there. The systems being long the market. Now, what basically is taking place now is with this particular bar today, the 21st, what we have is a dazed high, and the dazed high is one in which the market was highly volatile and has gotten into, basically has gone from normal valuation because of the nice meandering in around that support resistance level we were talking about, and then from that point it just shot straight up. And when you get these types of days, you can see in the past here, it's kind of an off-white plus sign. So here's one that occurred earlier in 2017. Let's see if the exact date, so you can pull it up for yourself if you want. It was actually the 4th of this year. And then the next day there was continued volatility, but then it sank and fell off a little bit. We had two more of these types of days where I mentioned the fact that you can get some continuation. This was on the 12th of May, and then a secondary one which was a different style, which was on the 16th of May. And so you can get these surges, but then it very quickly recovers, to where the market was prior to the surge. So the surge for us occurred in and around this level. When it broke above that support level, it's gone up. We could get some follow through tomorrow. I know the market could be quite volatile, and we'll have to see where the closing value is and then where the market goes over the next couple of days or so. So this is kind of a foreshadowing as to where the market might be going. So for those of us that are lucky enough to have systems on the long side, I'll just show you where we stand right now, where we've got a number of systems that are long. We had 4 in total. Got a nice little open profit on a per contract basis. And I just want to show this, that this is the position leverage. You can see that cotton is got a little more systems than normal because it's over 100%, but so too does cattle. On the short side, soybeans, we've got 200% where it's ultra aggressive. We've got some nice short positions going on with US dollar, and some nice open positions highly aggressive in Canadian dollar. So all I'm doing here is just sort of pointing out the fact that cotton has been strong, and it's at a point right now with this thrust that is more of a crescendo effect. I'm going to show this. This is not updated for today's action, but you can see that on the previous weeks, all the way through, back in time. This is this week, which is not updated for today. What we have is cotton back on the November 24th. It was the top 3 out of the 40 markets we tracked, so it was the number 3 market. Then we had 3 consecutive weeks where it was up and was one of the top 5 systems, and then this week, up until just today's action, it was ranked as number 28. But because it was up 2.5% or so, we're going to find ourselves, depending upon how these other markets went, it's going to be in the top 10 for sure. But it's going to be close to the top 5. So all I'm saying is that the market has been strong week out, week after week after week after week. Well, it's not just one big surge despite today's action, but it's been consecutive weeks. And so if we take a look at the depth gauge, you can see that the market has been trending up and has been extraordinarily strong here. And it's these types of conditions that bodes well for a continuation to the market, but I think we're going to see a little bit of recovery here. So there's an opportunity to maybe take some profits as you see how cotton reacts tomorrow and the next day. And if it starts to recover, sells off, you may consider taking some profits. But on the longer term perspective, I want to show this. Cotton is in the top 10 as far as those markets that are seasonally strong. So you can see through here that it's the number 2, just behind lean hogs. And if we take a look at, in this case, cotton, a little bit closer, and we take a look at the accuracy charts, all you do is just simply click on accuracy on the right-hand side. And what we'll do is we'll go ahead and scroll down, find cotton individually. All the markets are listed, obviously, and what we want to do is to take a look at the seasonal tendencies as to where the market is now and where it typically goes on a seasonal basis. So you can see for the remainder of the year, it's typically up. We're a little ahead of ourselves, I think, but nonetheless the bias is up for the remainder of the year, and then it has a bias again in mid-January, choppy as it is, all the way up and through say early part of May. So let's look at the 10-year bars. You can see that it's a little bit stronger. You can see it's hard to see here, but there is coming up a little bit of a recovery and then another surge to the market. Then the market goes sideways, and then you have the surge up until March, and then another meandering, not a surge, but an upward bias up until late April. So you get a feel here that no matter the time frame you're looking at for the remainder of the year, it's still quite positive if you're looking at the 5, 10, 15, or 20 years charts, I should say. So that being the case, today's action is great for the longs. There was a lot of money to have been made on the long side if you're trading cotton itself, or if you're trading BAL, the ETF, but the issue is going to be one where you have to be really, really careful here, given the fact that we're on a dazed market, dazed high, I should say. And we get that kind of a condition, as I said, usually the market being dazed, it's confused, it's, it was out of whack, it moved too far. That's why it's named dazed. That sometimes we see the traditional sell-off to the market. In other cases, we have just continued volatility, but it typically always comes right back down to where that support was. And the support, the market's support to the market now is at 75.41. So that's the key number. So from that perspective, we'll see how things kind of play out. For the time being, the systems are long, and we're going to continue to ride the systems as they are. We're not going to be making any alterations because they are going to do these things for themselves. But for those of you that are trading cotton and you're looking for an opportunity to liquidate your longs, watch cotton. I know that we're going to have, with the Christmas holiday and all the things that are going to be going on, that the markets are going to be less liquid, specifically cotton. But do watch cotton here very, very closely, because there's great opportunity to take some profits, and in hopes that the market does retrace a little bit, and then for those of you that are going to hold on to the position, the more position traders, not to worry. The seasonal tendencies are quite strong, and as long as we're able to hold at this support level at 75.41, or even bounce above this level here, 77.76, if we can truly stay above there, maybe there's a surge and then there's a bit of a retracement back down to this level. These are going to be the key levels that you're going to want to look at. I'm not going to get into soybeans because I've gone on too long here right now, but perhaps we can take a look at that market in the next day or so. So we'll go from there. So we'll take a look at another market tomorrow. Thanks for watching.